Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. Let's talk about when and where bottom. And I'll reiterate benchmarks versus beta as I have a few times over the past couple months, but the best times to be in momentum assets are when you have momentum. So if you're not sure or you don't have momentum, maybe it doesn't make sense to be dollar cost averaging stuff on leverage. Maybe that doesn't make sense if you're not sure. If the range is expanding to the downside in a big way, maybe you size that down. Maybe you avoid beta altogether. You avoid alts, you avoid miners, you avoid options, you avoid the leveraged ETFs, you avoid MSTR. You could be right, you could be, or you could just be very wrong. So it doesn't really matter what you're trading as long as you have your own personal stop loss levels in mind, or you're just going to eat it. Fine, right? If you want to DCA MSTR for the next year, I'm not going to stop you, but there may be better times to do that than when we have conditions like this. Me personally always comfortable in BTC, but for me, I like to stay out of this stuff in times like this, and that certainly means stay out of this stuff. You just want to survive in times like this, and you just want to wait for the fat pitch down the middle, like I've been saying. That takes time. So you wake up, you look at the charts, nope, nothing. Okay, great. We'll also talk about a framework that I use and you can use that I've talked about before. A few of these things I've already talked about in different videos, but you kind of need your own personal list of things to watch for. Are we bearish? Are we bullish? What does abnormal look like? Obviously, if you think the cycle's over, you've already sold, you're done. Okay, you're waiting probably for 70 or less to even think about start buying. And that's just a whole nother conversation. But for the people who are more in my camp where they don't think the cycle is completely over, they do think that we're likely to see highs eventually, and the risk reward profile is favorable, as in 125 plus this year, 150 plus this year, then you're probably looking to buy the dip. Or you're just ultra long term and you could care less. So you're really looking for obvious stuff. You don't want to be zoomed in on the 15-minute. That's not really where you want to live when we've got plus or minus 10% days like this. Look for horizontals, diagonals, volume profile. We'll talk about this. Channels, historical change. I'll mention that. Chart patterns, obviously. Anything you can see there. There's not really anything to look at just yet, but there's things to watch for, certainly, like a W. If we get a bat signal W that you can see from the moon, then yeah, that's going to be taken notice of by a lot of people. Divergences and oscillators are useful. We don't really have much of a divergence just yet. And of course, candles and candlesticks, not anything super helpful, at least over the past couple days. If we look at historically when we've seen Bitcoin's worst days of the year, if we zoom in a little bit on this, if we look at the worst day each year since 2014, it's actually improving. The worst day this year is already worse than the worst day last year, which is crazy to think. The worst day last year was March 3rd. Most of the worst days of the year occur in Q1. And this, from memory, is what I have always felt pre-COVID, that Q1 was never Bitcoin's quarter. But here we are. Anyway, so forward performance of this, really you want to be looking at the averages. The farther out from the worst day, the better the performance. Everything's green here. It's mostly up over down. So what does this tell me? This tells me when we do get the worst day of the year, should be a buying opportunity. Now, obviously this goes without saying, but it's only March 3rd, March 4th, and it could be a worser day down the line, obviously, right? And that would replace this, but we're already worse than last year. We're worse than 2023, actually, as far as percentage move goes. The averages here are kind of harder to really take seriously because you've, of course, got COVID in here. You've got a mix of bull and bear. You've got a mix of pre and post halving. But generally anything around 10% intraday is certainly something to take notice of, both up and down. But if we're looking at averages again, 6, 7, 8% a week from now, not impossible based on the past decade worst days of the year. So we, of course, have our intracycle plan, as many of you devoted viewers have seen before. It's important in days like this, once you've lived through enough of them, or weeks like this, cycles like this, volatility like this for BTC or what have you to have some sort of true north. Like, what do I really care about? Zooming out, maybe this list is smaller for you. That's fine. But this is just a list of things that seem to have a high hit rate, do great on back testing, and give you firm levels to look for. You don't really want wishy-washy, are we sure, are we not? If you're putting bids on the book, if you're trading this, right? Now you could always say, well, I'm just going to put in a ladder order or something in the 70s and 80s and just be done with it and come back in a couple months. That's totally fine. But if you're trying to formulate a bid plan, you do kind of need to look for levels, roughly, right? So starting at the top, when I talk about the cloud resetting being a good thing, this is an example of that because everything is bearish. It's obviously bearish, everything. Now we're in the cloud, so it's not as bearish as it could be, but it's simple. You go long when we're above the cloud, right? Or whatever framework you're looking at based on trend. 12-hour bear, 4-hour is even super bear. Daily alligator is bear. Daily 1050 is bear. The 1050 MA is one of the best back-tested moving average crosses that we have. And it's going to be one of the earliest signs that meat is back on the menu. Not quite seeing that yet. The alligator, by the way, was also, we'll take a look at this, was also super early on calling the bearishness. The key here was just patience. It was patience with the edge to edge. It was patience with the moving average rolling over, moving averages rolling over. And BTC was bearish before everything else was. Everything else looked great at all-time highs, right? So BTC is likely or more likely to lead the market out of the bearishness that we have now. Pitchfork or trend channel, it's a bit variable, but we're nowhere near the midpoint on that one. MVRV below 2, probably not where you'd want it to be for like hyper overbought or oversold conditions. Puel, miners not having a good time. You know, if you look at the mining stocks, you know that. If you look at hash rate, you know that difficulty. We're probably seeing some capitulation for some of the miners here. It wouldn't surprise me to see some headlines related to miners being in trouble to some degree. Transactions are down, prices are down, fees are basically non-existent, and it's post-halving, right? So they're making an amount of money that they probably were not prepared for relative to their costs, but we're still bearish on those metrics. M2 money supply continues to roll higher, liquidity rolling higher. It was easier to use this as an indicator when we were at some horizontal, but it's certainly not bearish if the money supply is increasing. And then we get to the levels. These are the same. They never change as far as what I'm using on this indicator list. This is really it. I don't use a lot of stuff personally. 20-week moving average, short-term holder realized price, 200-day moving average, and then just some sort of rule of thumb, is this good enough levels? Drawdown from all-time highs, fibs in the range, yearly pivots, weekly key June, psychological support 60, 70, volume profile supports, we'll take a look at that, and some more yearly pivots, 200-week moving average. You know, we're not going to hit these levels in this this cycle, I'd imagine. I would venture to guess a few of you may be hoping for 45, but I don't think we're going to get that low. I also don't think we're going to get down here. So realistically, if I want like a sweet spot, averaging all of these out, 78.2. Sure, that seems like a good spot. Or you could just blur this as far as the bid zone, put some stuff in here from 73 to 83, and just walk away for a couple weeks, go touch grass, meet your children, that sort of thing. As far as the indicators individually, one that probably isn't talked about too much, but it has been talked about more recently is short-term holder realized price. Short-term holders are defined by coins that have been held for less than 155 days. So you can look at that on the blockchain and formulate a value. In 2016, 2017, we held above that. In the bear periods, we generally hold below. In 2020, 2021, above. Bear period in 2022, below. And then since 2023, we've mostly held above this level. So currently we are below this level. And it's just probabilities, right? It's not absolutes. Only Sith believe in absolutes, as I butcher that word. But we are now below short-term holder realized price. So anybody in the past 155 days is underwater at this point. Hash ribbons looking at the 30, 60-day moving average, also still bearish. And you can see the highlights here. Generally, price tends to drift lower when ribbons are crossed bearish because you have miners selling or hedging versus when hash rate is increasing. So still waiting on that one to flip. Another one just ancillary that I didn't mention was funding. Funding has mostly been positive, and we can see what this has looked like in bear periods versus bull periods. Bull periods, funding can get crazy, right? This was 2021. This was 2023 into 2024. This was more recently in late 2024. Generally, what you want to see is funding teasing negative values, and we haven't seen a lot of that yet. We saw a little bit of that at the bottom of the range in 2024, and it certainly has reset, but it hasn't stayed negative for multiple days just yet. And that's generally a sign that people are coming in and shorting this, and that's what you really need. You need sentiment and positioning to just flip from buying the dip to let's short everything, assume this is going lower. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Pair Ventures Inc., PVI, DBA, Kraken. So on Kraken Pro, you can add all these indicators directly to your chart here. Big one for me is cloud. Obviously, cloud is not telling you any of this is bullish, and that's fine. On the daily, we know we're not in bullish territory there. Confidence in the beta stuff, confidence in leverage goes up dramatically when we're above the daily cloud. Then that won't be until April. Unless we somehow miraculously get back to 100K before April, it's going to be slop and chop probably till April if we survive the range. VPVR level up there is also 97-ish. So that's a big level on resistance based on volume at price. On the downside, support here is at 62, 67, 70. So there's a cushion should we keep going here. But the volume spikes do give you a pretty big range at the moment. We did bounce from the yearly pivot. I don't know why. I don't know why this works, but they do historically backtest this. When we're talking about range expansion, we generally tend to shift towards the yearly pivots, and we did. We tapped 80. We had a dragonfly as far as candlesticks a couple days ago. We may close today on a dragonfly. I didn't mention any of this yet, but obviously we're getting tossed around like a rag doll based on headline risk, tariff news, that sort of thing. Lots of nonsense going on that front. So that's cloud, pivots, VPVR. We turn off the cloud and we look at the 1050 cross. This was bearish back here in February 9th. So this is probably going to be the earliest thing to flip. And that, again, probably won't flip until April. And that's okay. But it gives you something to watch and something to look at and backtest it, right? If you don't believe me. Is it perfect? No. Is it going to be noisy when we are choppy? Absolutely. But like the cloud, some low time frame cross will try to keep you on the right side of the trend. Alligator fractal has been bearish also since around February 9th, 10th, 11th. And you just want it to flip the other way, right? It's just easy to see and look at. It's kind of like the cloud. It has three modes: bullish, bearish, indeterminate. And you're going to want to see a move above a fractal, which currently it's at 95. So that's going to take some time. Again, into April. None of this stuff is going to happen quickly. Look at the 140 and 200-day moving average. Also, we're kind of in the wheelhouse of those. In the 200-day, along with the fib target of the move lower, all this stuff is kind of in that 25 to 30% drawdown from all-time high. So we call that confluence. There's lots of evidence for a specific zone, and then you just assign some probabilities. You say, okay, I think this level versus this level, this set of levels versus this set of levels. Man, you're just patient until you get a better signal. But alts, I would have just, they're not for me. I'd avoid them. You could go through this process with something like Solana, with something like ETH, but you have to understand nobody's going to be happy until BTC's happy. So to get BTC correct is key here. I don't know if the 1050 backtests as well on the daily for alts, but it's definitely something to look into, to look at. Just because it's fast, you kind of need some other parameter that's slightly faster than the daily cloud most of the time to just have a sanity check, right? So we're still very bearish on this, and it's going to take time for Solana and ETH to figure out what's going on. Something else to watch in the periphery would be ETFs. If we continue to see flows flat or slightly positive, that is a great signal that a bottom is in. We had a massive outflow, a lot of this being the basis trade last week, But that was the crescendo of days and days and days of mostly negative flows. Doesn't take a rocket scientist to figure out positive days are more bullish than negative days. Is it one-to-one? Is it perfect? Is it always going to be X% move based on X flow? Absolutely not. But just eyeballing this, you can say, well, we generally go up when flows are positive, right? We generally go down when flows are negative, and when flows are choppy, we are generally choppy. So it's definitely something to watch on the periphery. I tweet these out every day. On the legacy side, alts need BTC to be happy. BTC needs legacy to calm down volatility-wise. S&P's at risk of breaking down below the cloud here. Levels to watch there would be 550, 100%. That would be the measured move of the range breakdown. It is in bearish territory now based on the cloud. This may have bounced a little bit, but the best time's the long, just like anything else. Doesn't matter what it is. Bullish TK cross, price above cloud. That's the favorable trend conditions. Nowhere near that for the SPY, and the Qs nowhere near that. 460, 480 would be the level for those. So have a framework, have a plan. It's easier to put that together once you've lived through this a bunch of times and you know what works and what doesn't for you personally. I will put some more of these videos in the description of this video. I will put the sheet in the description of this video. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.